This is the Retirement Key Podcast with Abe Abish, founder of Abish Financial Services.
A lot of firms out there say they will do tax planning, say they will do Social Security planning and RMD planning, and typically they just do investment management. They want your money.
You've worked hard your whole life to earn and save. Now you need a plan to make that money work hard for you.
Where do you stand today with your retirement accounts, with your insurance, with Social Security, RMDs, taxes, all of it? This is how we need to think. We need to think outside of the box on these matters.
Abe is here to help you unlock the keys to your retirement.
I know that it's been several days now, but have you still overcome the high that was watching Washington upset Tampa Bay and Tom Brady?
Hey, yeah, I feel like we just won the Super Bowl. You know,
right?
maybe that was our big Super Bowl win during the season.
That's it.
But all the Washington fans out there probably empathize with me. I've been a diehard fan.
Yep.
As long as I've known what a football is, and have just loved the burgundy and gold, and I don't care how great they are, how bad they are, I'll always be a fan, especially when they're playing that team from Dallas. But, you know, over the last 30 years, it hasn't been too easy watching the team, and oftentimes they're up and they don't finish out a game, and they'll just blow it at the end of the game. Well, that didn't happen this time, and with a few minutes left in the game, we actually went all the way down the field. We didn't turn it over. We scored to give us more points on the board, and we gave one of the greatest to ever play football. We gave them very little time, and the game was over, and it was amazing. Everyone was betting against Washington to win that game.
Well,
Any given Sunday.
But the great part about it, all of this goes to say, though, you were actually there, right?
I was there with some of our WMAL friends, and it was a great time. It was a great time.
Such a fun thing to experience. And trust me, as a person who knows the ups and downs of being a sports lover, I am a Virginia Tech alum. I watch my Hokies get rung through the ringer, it feels like, every season. I sympathize. Every Hokie who's listening to WMAO right now is nodding along going, yes. So we'll take the Washington win all the way home and celebrate it for all Virginians. So Hokies and professional football fans alike.
That's right.
So congratulations to our Washington team. But in the meantime, we do need to focus on the way you help us crossing that goal line when it comes to that retirement game. We are all hoping to play well when it comes to our own fourth quarter in life, Abe. And with that in mind, want to talk to you about preventing a sophomore slump in our retirement. I know you've got some how-to tips to share with us. Also, we've been talking about how important financial checklists are for the end of the year, but there's also something else you need to check in the way of your insurance coverage. So we'll dig into that a little bit later on this half hour. But first, there is a new kind of inflation that's creeping in since the start of the pandemic. It's called SKIMPflation. And this is where companies, big and small, are skimping on the quality of goods and services, mainly due to staffing shortages. And airline customers are waiting longer on the phone. Pizza delivery is taking too much time. Hotel rooms are going uncleaned. A lot of restaurant diners may not return after bad experiences. Software company president Brad Anderson tells CNBC it's no wonder U.S. customer service is at a 15-year low.
If an organization is not expending the effort to really listen in and then deliver personalized experiences, they're just going to miss expectations and satisfaction is going to be very low. What I hear from business leaders every day is they're all struggling with the competition for talent. They just can't find the people that they need.
So, Abe, what's your approach to customer service as an independent advisor? How do you go the extra mile to give that personal touch that other advisors aren't able to do?
Great question, Heather. Well, quite simply, and I'll go into a little more detail, we try to love on our clients, and in return, our clients feel that love and they love us back. And we do that through a lot of different ways. You know, we show them that we care, and we show them that they're valuable to us. You know, we are a family firm here in this DC metro area. We're not a big box firm with millions of clients where you're just a number, right? And if you leave with your $1 million to $3 million, there's another number right behind you, and they're not going to care anywhere near as much as a family-owned firm. If we have a client leave, we would really feel that, right? And we hardly ever have clients leave. And our current clients continue to invest and give us more dollars because we do what we said we are going to do from the beginning. And that's be honest. That's be transparent. We follow a really strict code of conduct here, Heather, as a fiduciary firm, and then myself as a certified financial fiduciary. The code of conduct is strict. Here are some of them just to show our listeners kind of the approach we take and to show our current clients that we do care. A lot of it stems from education, helping our clients to make a decision through sound financial education. That's a big way that we build trust. We don't sell. Obviously, we make money and earn a living by, charging a fee for assets under management, maybe earning a commission if, a life insurance policy or long-term care or annuity is implemented in the plan. Sure. Just like most advisors out there. However, we don't lead with that. We lead with the plan and we lead with education first.
Right.
So just a couple of things. We take a holistic approach. We lead with transparency and honesty, full disclosure. We're always comparing the pros and cons. Everything's confidential. And those are just some of the things. And then really, at the end of the day, we try to show our clients that we care, Heather.
Right.
We try to show them that we love them. And I would say if you interviewed most of our clients, they would say that they feel that. They feel valued. They feel treasured. And that's why they stay and continue to invest more and more dollars with us. And we just had a couple come in actually for a review, Heather, one of our current clients. They live in Tyson's Corner. They actually called in from the radio show. Like most of our clients, they've done a fantastic job of saving. They've saved about $3.5 million, but they're concerned with inflation and taxes. And if you lean a little more conservative financially and maybe even politically, you're probably concerned with the current environment financially, $30 trillion in national debt, and what's going to happen to taxes in the future. And what's going to happen if we just continue to inject cash into the economy, a price is going to be paid for it. And right now we see across the board, as you just mentioned, all Americans are suffering from inflation to some extent.
Yeah.
I mean, prices at the gas pump, and I just heard the other day the cost of pizza in New York City is going up. You can't get that dollar slice anymore.
What?
Everything's going up. And as you mentioned, just the experience out there because of the staff shortages and everything is not as good as it used to be. So I feel like all Americans are suffering to some extent because of what's going on, inflation being one of the big things we have to pay attention to. And with inflation so high, that was one of their biggest concerns. And the reason why it was one of their biggest concerns, Heather, is because they're super conservative financially and they have tons of extra cash, CDs, nothing renewing at over 1%, nothing renewing at over 1% with a ton of extra cash in the bank. A lot of money in the G fund and their TSP, even though it's safe and protected, barely earning 1% itself. Have some money in treasuries, and again, under 2% there. So concerned with inflation and taxes, what was the solution as they continue to come in for a review? Just saying, hey, what are the ways, what can we do to get some of this excess dead money off of the sidelines, working harder for you so that we can better keep up with inflation as we head down the road? And some of those strategies are managed portfolios, that we have on our platform that are going to keep up better with inflation. Even if we're looking at a 5 or 6 conservative % yield there, that's going to keep up with inflation better than cash in the bank, right? If we're earning less than 1%. Sometimes we'll look at really conservative vehicles like a fixed annuity that might give you a guaranteed yield of in between 2% to 3%. Sometimes we'll look at a fixed indexed annuity, other cash alternatives that we have to really say, hey, how can we continue to protect this portion of your nest egg, but not go backwards and actually lose money when inflation and taxes are factored in?
All right. Something else that we got to worry about is, of course, the idea of our market investments in our retirement years. And an article in the Wall Street Journal talks about a, quote, sophomore slump in the stock market next year. And that's because for the last 75 years, stocks tend to fall short of their long-term average annual performance during the second year of a new U.S. president's term. And the story says we could see that in 2022 due to factors like lofty market valuations and doubts over whether stock markets can repeat their bullish trend. Abe, how can you help prevent a sophomore slump in a retirement plan?
Heather, you got to reduce risk. We have to de-risk the portfolio as we head into retirement. And, The article mentioned, hey, the rush from COVID relief programs is starting to fade away. Fed policy, meaning tapering, pulling back on the cash injection into the economy is going to start. They're going to start pulling that back. Interest rates will start to rise slowly. Corporate profit growth is going to start coming back probably, especially if taxes go up. So a lot of reasons why we'll probably start to see the market slow down eventually. Who knows when that'll happen? But we do have plenty of time and warning signals to be able to kind of watch this and make sure that we're out of harm's way, that we've built a moat around the castle in terms of our retirement, because we don't want to be exposed and be taking on more risk in the market than necessary. We had a lady call in who's 60, Heather. She's now single, divorced. She's retiring in 3 to 5 years. She's got $1.5 million saved. Wow. She's a college professor at George Mason University in Fairfax, Virginia. And that's where she lives, and she's going to be retiring in 3 years. She was concerned, and she came in for an analysis because she's got a couple of annuities. She really didn't know too much about them. She was sold a few annuities in the past. We found out through our analysis that they are variable annuities, which I would say very few people care for or like. We dislike them as well for two big reasons. High in fees, typically 3 to 4% in annual fees. And when the markets go backwards, their values will go backwards. Typically, these products are sold to people, Heather, without the client truly understanding what they're purchasing. And if most people understood what they were getting into, a lot of people wouldn't get into them in the first place, which is why most are sold and not truly purchased with understanding. So what was a solution? That was one weakness in her plan. She also needed to make a pension decision. She had a lump sum in her pension. So solutions were kind of going through this all in her plan, helping her to make a pension decision, helping her to get out of some of the weaker investments and strategies in her plan into investments and strategies that are better aligned with her investment profile from here on out.
Thanks for listening to the Retirement Key Podcast with Abe Abish. To learn more about Abish Financial Services, visit retirementkeyradio.com and join Abe for his radio show, The Retirement Key, Saturdays at 2 p.m. on WMAL.
Patrick Volk is an investment advisor representative of J. Hagan Capital, Inc., a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Abraham Abish and Patrick Volk are licensed in your state, please call 571-577-9968. Abish Financial Services is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Abraham Abish or Patrick Volk. NPN number 770-3575 and NPN number 727-978.